Now, in previous conversation with CNBC-TV18, Vibha Padalkar, Managing Director and CEO at HDFC Life, has given a very strong guidance on business. Now, in an exclusive new conversation with my colleague Yash Jain, Ms. Padalkar says that she will stick with the guidance that she's given out earlier. She clarifies on the continuity of her term as Managing Director and CEO amidst ambiguity on the regulations there. Listen in to this conversation.
Nothing really has changed in terms of when we spoke last. 1 or 2 months here or there will be there, there's some contest or there's some other, some festival that is there. If you were to look at August, just for the standalone month that just went by, we grew 16%, comfortably ahead of the overall sector. So that kind of a trend wherein we have said we will grow this year because of the tax changes in mid-teens, that still stays. Now, what this doesn't factor in is any kind of regulatory relaxation or tax relaxation or something like that, or any other macro event. So we are very much on track to get to the mid-teens growth number on the overall APE basis.
What has been the status on VNB as far as the second quarter is concerned? And if the first quarter and the second quarter, that is H1 itself, is about 18%, around that number, could the second half be even better than your guidance, going up all the way up to 20%?
See, if you were to look at first quarter, there were some things regarding the Exide Life merger, because like I had mentioned, Exide Life was in single digits versus where HDFC Life was. And so on a blended basis, including Exide Life, you would have seen that uptick of the 18% that you are talking about. I think margins, like I had said before as well, NBMs will remain fairly range-bound versus last year, and growth will be in the mid-teens. As a result of which, on a full-year basis, VNB growth will be in mid-teens. Last year got a fillip because of the tax withdrawal to some extent, and so even getting to that number in terms of new business margins will be a challenge, but we will deliver on that. Okay. So margins will be very, and if you remember, about 900 to 1,000 crores of additional business was done just in the month of March in FY23. That itself is very, very margin accretive because of it being additional. So keeping all that in mind, getting to that number itself is something that we will deliver, but it's something that we will be working towards.
Are there more strategies that you're working on to sort of, go past that 30% psychological level? Are there more strategies in terms of products, in terms of distribution, that could sort of, be a good leverage to you to go past that 30% mark?
Absolutely, and some of that is ensconced in the draft insurance amendment bill. For example, health. This is a missing piece in the puzzle, and I've talked about it time and again, that when you have a prospective policy holder, you cover everything except health indemnity. Also, we could utilize this to sell more health riders and so on, and the pie really needs to be expanded. So we have no intentions of just redividing the pie, but how do you grow the pie? It's not even 1% in terms of penetration levels, right? So, really, the opportunity is huge. That is one. Second is that, again, in the draft bill, we have wherein distribution of other financial services products. So if banks can distribute insurance to regulated entities, why can't insurance companies distribute? It could be banking products, it could be pension products, which today we cannot do. Again, very margin accretive, not very dissimilar to what banks go through. It's a question of if the customer is walking into any touch point, be it at a bank branch, be it at an insurer's branch, be it at a general insurer's branch, be it at a NPS touch point, we should be able to give that one-stop shop if the customer so desires. So that's the objective. That, again, very, very margin accretive. And third is, again, the ask in terms of being allowed to invest in insurtech companies.
At the start of the year, we had the big announcement in terms of taxation of long-term savings products. It's been reasonable amount of time since then into business. To just look at it objectively through numbers, last year, first half, what was the share of long-term savings policies as far as your premium portfolio is concerned? Where does that share stand now? How much has it reduced from where it was last year?
So we were also surprised. Few data points I want to give you. One is that below 5 lakhs, our policies have grown about 15 to 17%. So healthy growth in below 5 lakhs, right? And so like I put out, this is on 1st of February, to say that about 10 to 12% impact. It's not very different to that. Okay. And this whole machinery of below 5 lakhs has started kicking in very nicely. As a result of which, if you look at first quarter, our number of policy growth, which is very important now that ticket size growth has gone down because they are above 5 lakhs. So our NOP growth has been was in the first quarter 9%. But if you look at the NOP number of policy trending now, it's in the 14 to 15% range. So that clip of more and more lives and more people that the entire machinery is starting to engage with and then convert into policies has started happening. Okay. Yes, it will take some time in terms of the above 5 lakh in some of our wealth channels. But mass and mass affluent, that whole engine has started kicking in and very evident in the number of policies.
You know, a recent development on a general insurance company side, of course, one of the individuals leading that company tendered his resignation because of the regulators' regulation on 15 years into service leading a particular company. Now, there is some confusion on whether does it apply on the duration of the individual being at the top position, that is the managing director and CEO, or being on the board seat. For you were appointed as the ED in August 2012, elevated as the CEO in September 2018. Now, just want to understand from you, to clear this confusion, does it apply in terms of 15-year duration from August 2012 or September 2018?
The regulations issued by IRDAI, this is effective 30th of June of this year, did have wordings to this effect, and our interpretation was that the counter starts from when an individual assumes office as MD and CEO, given that these two roles and responsibilities are very different. We did seek clarification from our regulator, and our view was corroborated by our regulator.
So then in that case, if the understanding is right, then you have time till, let's say, September 2033 if you want to continue in the office as MD and CEO.
And if the board and shareholders are also acceptable to that idea, yes.
Okay, interesting chat there with HDFC Life CEO.